A lesson from history and a warning from the man who broke the Bank of England. Now, George Soros predicts the British pound will collapse if the UK votes to leave the EU. But is the billionaire currency speculator right? Also ahead, when is an iPhone not an iPhone? We look at the Chinese companies engaging in so-called trademark squatting. And the internet. We might be putting more and more of our lives online, but are you safe or even free? I'm Matthew Moore in Istanbul, and this is Money Talks. Now, for many first-time voters in Thursday's referendum, the name George Soros may not mean a great deal. But back in 1992, the billionaire investor predicted that the British pound, or sterling, would take a drastic fall, and he then made more than $1 billion on the outcome. In an opinion piece for the Guardian newspaper, he's warning that a similar fate could follow a Brexit vote. In his article, he said, too many believe that a vote to leave the EU will have no effect on their personal financial position. This is wishful thinking. It would have an immediate and dramatic impact on financial markets, investment, prices and jobs. A vote to leave could see the weekend with a Black Friday and serious consequences for ordinary people. Well, let's take a look at this claim now. Joining me from London is ETX capital market analyst Joe Rundle. Joe, thanks for joining us on Money Talks. Do you agree with him?
Yeah, I do. I think he's right. People have underestimated the effect, and it will be an immediate effect should we vote on Thursday to leave. And I think he's probably correct in the severity of it. I think probably actually he was talking down to 115 in cable. I think we might actually test parity in the medium term should we have a vote and a messy exit.
But why would it happen, and what would be the effect on British people, for example, on their finances?
Well, I think people really underestimate how many jobs are directly employed, and that's not just immigrant jobs, that's UK nationals' jobs are employed because of the EU. For example, here at ETX, we employ probably about 30% of our staff directly because of the EU. Should we vote to leave and there's not a good agreement, we will be forced to relocate those staff away from the UK, and that is a loss of British jobs, and people don't really understand that at the moment.
OK, Joe Rundle in London, thank you for your analysis. Well, we're going to stay with Brexit, and joining me now from London is TRT World's Simon McGregor-Wood. Simon, a lot of people, the older generation particularly, have heard of George Soros. They know what he did very well.
Yes, he enjoys a certain notoriety in this part of the world, Matt, because back on September the 16th, 1992, he, in his capacity as a currency speculator on behalf of various hedge funds and others, bet against the pound and forced it to leave what was then called the exchange rate mechanism, which was a precursor in broad terms of the Eurozone. It was a day of national humiliation for the UK economy. I personally remember the Chancellor of the Exchequer at the time, Norman Lamont, coming out and admitting defeat, if you like, at the ejection of the UK and the sterling from the exchange rate mechanism. It subsequently turned out not to have been too bad for the UK, because they were then able to devalue the pound and exports kick-started, and we got out of what was a very bad recession at the time. But when George Soros starts talking about the pound and speculation on the pound, people here sit up and take notice.
Now, Simon, for the people who want to leave the EU, immigration is a big issue. What's their economic case against immigration?
The economic arguments against it for them include things like the pressure on public services, schools, hospitals, road and rail networks at a time, don't forget, of austerity and public spending cuts. They simply say that unlimited EU migration has led to an unnecessary pressure on those services. They also talk about the effect that up to 3.3 million EU migrants in this country have on suppression of wages. People are complaining about that from the Leave campaign. They also talk about things like the downward pressure on the housing market and other things like that. Now, it is a very, very significant issue for the Leave campaign. We've been up and down the country the last few weeks trying to find out why it's connecting with so many British voters at times when the Leave campaign has been ahead in the polls. It is the one issue that the British voter has been complaining about. We've tried to get to the bottom of it, and here is the report that we did on it. This ancient port city tells a typical tale of EU immigration. Thousands have settled here for jobs and better pay. Over 27,000 Poles live in Southampton today. That's over 10% of the city's population. And there's plenty of evidence of their contribution to the city's life and economy. Thomas Gill came here with his parents when he was 13 and now runs a marketing business with over 300 clients and a turnover of $700,000. He is scared of what might happen if the UK votes to leave on the 23rd.
Are we going to be packing our bags and going? Does it mean that we can stay here for a short period of time? Do we need to apply for visas? My future at the moment is very dependent on what's going to happen after the 23rd. I might come back here on the 24th and I have to hand all my staff members a notices to say, well, I'm sorry, but given everything that's going on, we're having to close the business and I have to pack my bags and go back to where I came from.
The scale of EU immigration has become one of the key campaign battlegrounds, with politicians on both sides saying the numbers are unsustainable long term. 3.3 million EU immigrants now live in the UK. 2.15 million of them have jobs. In 2015, net migration, which also includes people from outside Europe, was 330,000.
The statistics show that most EU immigrants work and therefore they pay taxes. But they also use public services, things like schools, hospitals and social housing. The Vote Leave campaign says the numbers are simply too high and that the only way of getting some kind of control on them is by leaving the European Union. And it is a message which is connecting with many voters.
If you know anybody who's undecided,
in Shirley Shopping Precinct, the Vote Leave campaign is trying to sway the undecided. Perline Hingston is herself an immigrant from the Caribbean, but she insists EU rules on freedom of movement have been a disaster.
Britain is a small country. People may come and work and contribute, but many of them also get in-work benefits. Their children need schools. These people go to the hospital, they want doctor's appointments, they use the roads, they use the sewage system. So, you know, our infrastructure cannot cope with unlimited numbers.
For generations, British society's been shaped by immigration, first from former colonies, now from the EU. It has largely been a positive story.
We're not big enough. We're overdone. We're full.
But the scale of EU immigration is bigger than anything that's gone before. And under EU free movement rules, there's not much that can be done about it. And the debate is proving divisive. The big question is whether British voters think control of immigration is important enough to them to risk the possible trauma of breaking away from Europe. Simon McGregor-Wood, TRT World, Southampton.
Well, we've heard about the worries about the pound, but what about the euro? Would a European Union without the UK be bad news for the single currency as well? That's the question for today's Q&A.
Hi, my name is Rohit. I'm from India. Just a quick question to you. If Britain pulls out of the euro, which is what is going on right now, what will happen to the euro itself, its value, and what is it's going to be the general impact is what you feel?
Well, I do think that question is very, very relevant, and I do think that it is possible that the biggest legacy, perhaps of a Brexit, if there were to be one, would it be its impact on the European political situation? Bearing in mind, of course, that we already have cracks within the cohesion of the EU already, with surveys suggesting that several European countries already see some anti-EU feeling. So that is the biggest problem, I think, on a Brexit, not just about the UK economy, but the damage it could do in the EU more broadly.
–
One of the Leave campaign's main arguments is that the EU wastes hundreds of millions of dollars every year on bureaucracy. Let's get into this now with Craig Kapitas, who has his usual flip side take on things. Craig, talk is cheap, it should be, but not for the EU, right?
No, money actually does talk in the European Union, where a little bad English goes a long way. Look, Matt, the EU has this 330 million euro a year translation budget, and they just dipped into it to print a 66-page English language dictionary for bureaucrats. Now, there are 24 official languages in the European Union, but English, well, a kind of sort of English remains the dominant tongue. And it's really quite confusing. So let's go to the dictionary and make it even more confusing. Right now, the UK is, in Eurospeak, is actually delaying Thursday's scheduled vote because in the inscrutable English of Brussels, delay actually means a deadline, a time limit, and it doesn't mean put off to later. If you're for Brexit, well, the bureaucrats agree that you're out of control. Or to translate that back into English, you don't have a monitor to guide you back into the fold. Control in Eurobabble English means a monitor.
Sounds to me, Craig, like George Orwell would love this for his next book. Well, let's go around the world now in 60 seconds for the top business headlines. Africa's richest person just lost $3.7 billion in a single day. At least on paper, Aliko Dangote's stock holdings plunged in value as the Nigerian currency nosedived 30% on its first day as a free-floating currency. Prosecutors in Germany are probing whether Volkswagen's former chief executive is guilty of market manipulation. Investigators suspect that Martin Winterkorn and another senior executive delayed informing investors about the company's emission scandal. Tesla wants a bigger factory to boost production and cut costs, and it plans to build it in China. The electric vehicle maker has agreed to spend $9 billion on a new manufacturing base in Shanghai. And Brazil's largest ever bankruptcy, telecommunications company Oi says it can't repay $19 billion in debt. The government-owned company tried to restructure last week, but a plan to give 95% of its shares to private creditors was vetoed. Well, plenty more to come after the break on Money Talks, fighting a losing battle. Apple faces trademark challenges in China. The future of the internet, we look at how the experts are trying to protect us from cyber attacks and surveillance. And smile please, why the new dating app that finds out who you are from just your face is creeping some people out.